So we'll break this down from start to finish. I'll show you my entire process from analyzing the trade, marking up the charts, my different settings, through to execution and exit from A to B. Right, here's a clean trade I took just today. A nice clean short. You can see I shorted around here at the previous week's point of control level, and that went down, and I took profit at 6:15, just right here before that little reversal. Just for a clean 1700, quick and easy on one of my take profit trader funded accounts. So before we break it down, here's what it looks like. Maybe a bit confusing. Here's what it looks like with all the makeup on, all the charts, all the levels analyzed. Right, so I'll break you through start to finish how I frame up my day, how I frame up these setups, my entry process, my exit process, etc. So first of all, let's talk about what those orange levels are. So the orange levels you can see on the chart are, number one, my weekly levels. So I have these on the chart every day, right, as my weekly levels for reference, and I mark them in orange. Now, a weekly volume profile is drawn, I always draw it, due to the way TradingView calculates it, you have to draw it on the 1 minute time frame to get the most accurate result. All I'm doing is I'm grabbing that fixed range volume profile indicator, as you can see up in my favorites toolbar, fixed range volume profile indicator, and I'm dragging that from the previous week's Sunday open. Back here, you can see I've drawn a big profile, the previous week's Sunday open, right there at 6 p.m. and I'm pulling that profile all the way through until Friday's close at 5 p.m. of the previous week. So you can see that's drawn there, right where the orange levels are extending from, and I'm pulling that profile across for the whole week. So that's the weekly levels, and then from that point, I'm marking out your weekly value area high, weekly point of control, and weekly value area low. Key levels of reference for the coming week. So those are the lines in orange you can see extended across. These will be valid for this week's trading. You can see that's where I actually got my trade set up from today. The second thing I'm doing is I'm then drawing out my previous day levels. Now my previous day's levels are drawn from a very specific time range, and they're drawn from the previous day's regular trading hours session, or the most recent regular trading hours session. So because I live in New Zealand and I trade the overnight session primarily, I'm trading after 6 p.m. Eastern time on any given day, which is about 10 a.m. my time in New Zealand. What I'm doing then is the most recent regular trading hours session was the same day, so Monday, from 9:30 a.m., which is when your regular trading hours starts, through to 4 p.m. 9:30 to 4 p.m., that's when the volume drops off. So I'm only highlighting that high volume session, 9:30 through to 4. Now these levels weren't as relevant today, but it's part of my process to then mark out, the same way I would with the weekly profile, mark out those levels for reference. And I mark these previous days levels in white, and I label them, right? I've got templates saved, I label them for previous day's value high, point of control, and value area low. All right, so that's the second part of my process. Look at the weekly levels, look at the most recent previous day regular trading hour levels, mark them on the chart, then I use those to frame up where price currently is. And we can see, before we start analyzing the current session's volume, we can see that right after that overnight open, we opened up below the previous day's point of control, or fair value level. This is what's fair value, true fair value, not fair value gaps or anything, but true fair value based on volume and transactions. The area of fair value based on the most recent high volume session was at 6:042. You can see we opened up overnight at 6 p.m. below previous day's fair value, and sellers immediately took control and pushed us down, and then pushed us down below discount prices at previous day value area low, and there was no sign of buyers down here as we headed back towards previous week's point of control. So we're able to get a little bit of an idea here that perhaps sellers are going to be in control, at least for the session that I'm about to trade, because we failed at fair value. Buyers were not looking to buy back up at a fair price, but sellers, however, liked this fair price, and price pushed down from here beneath discount with no sign of buyers showing up below discount pricing either. So that tips me off, number one, okay, I should perhaps look for a bearish play today if I want that higher probability move. So that gives us a little bit of daily context. Now the next thing I'm doing after framing up that daily context is I'm then looking at the current session developing profile, and this profile is more dynamic. It's not one that we draw across a range, it's one that continues to develop with price as I'm stalking my trade setup. So this profile, We call it the current volume profile, current session volume profile. I just call it CVP. Now the way to draw this up is I normally start this profile from 4 p.m. So right from that volume close, that volume drop off, I grab that post-volume, post-New York volume until the close, and I capture that up until my point of trading. But sometimes you'll notice that when the overnight open pushes price away from that post 4 p.m. volume, it can be kind of hard to see the volume that's developing around here in the overnight session, because that New York volume is just so much bigger, it kind of drowns out the new volume that's developing overnight. So what I like to do in these cases where price is moving away from that post 4 p.m. volume is I also draw a profile from the overnight open at 6 p.m. and I pull that through to current time whenever I'm trading. So I'm just drawing it through to when I took my execution so you can see what the profile looked like at the time of my trade. But typically, these are the settings I use on the current session volume profile. Is I have it like this and I click the box extend right so that it continues to move with current price, so I can see where value is developing, where the point of control is developing without having to manually drag the profile. So that's the usual settings, but for now, we'll just draw it through to the current time of my trade execution. So those are the three steps that I use to frame up my day or my trading sessions: your weekly levels, your previous day's levels, and then your current session volume profile to see how value is developing. Now, why did I take this trade? Well, there's a combination of things here today. So number one, like I mentioned, if we look at those previous day value levels, the levels in white, we failed off fair value, buyers failed to step in, sellers took control from fair value, right? We moved down. We came down to previous day's value area low, which is normally what we'd consider discounted prices, because this is outside of the lowest end of value for the previous day's high volume session. This is what we call discount pricing, right? And it's not based on candlesticks or based on 50% of a range. It's based on real transactions, real volume. This is where the edge of value is, where discounted pricing is. Vice versa, if you go above value area highs, that's then expensive or premium pricing. Up there you can see our previous day's value area high and previous week's value area high. This would be expensive pricing. Would only go above there if bulls are in control. However, if sellers are in control or arranging, you'd want to look for price to fade off this area. With that in mind, seeing that sellers push down from previous day's fair value, and not only that, but pushing below the discounted prices with no sign of buyers coming through here, that tips me off to think, hey, okay, it's time to look for a good opportunity to short. I'm not looking to buy back or fade this, I'm looking to continue a short move to the downside. So what I look for in my trade here is we can see that when we came down below the previous day's value area low, and then we came down to the previous week's point of control, which is the point of fair value for the previous week, if there's going to be any sign of buyers, we're going to see them buy this level up aggressively. However, we got down to this level, zero. Sellers chopped through, there's very little sign of buyers. We easily put in a new low of the day, breaking below the previous week's fair value level. So what I look for at this point, very simple. Now those of you who have taken the course know that I don't look for confirmation. Confirmation, in my opinion, is a retail trap. And from what I've learned from my mentors, most retail traders waiting for confirmation. By the time they've got confirmation, the move's already happened, it's too late, or you're giving yourself a much worse risk to reward ratio. So I like to go in at logical levels with a fair stop loss and trust my levels, trust my analysis. Now, side note, I execute my trades on Tradeovate using the DOM and the copy traders, all right? But for the purpose of execution and teaching, we use TradingView to show the executions. But these trades, these exact trades, have been executed on Tradeovate's DOM. I take all my trades off the DOM for ease of execution and to see the way buyers and sellers are behaving in real time. Now, when price pulls down below previous week's point of control, no sign of buyers. The moment it pulls up and pulls back to that previous week's point of control, I get my position short, okay? And the idea behind this is that broken or weak support, when it gets broken through, the same rule applies. Broken support turns resistance. So that's the rule that I'm following here, is this previous week's point of control with a bearish bias in mind. This previous week's point of control, the support level, is broken. So when it pulls back, I'm looking for that to act as resistance. And you can see I got my position in there short. I fat fingered, accidentally bought a contract instead of sold a contract, so ignore that one little blue buy execution there. That was quickly remedied. But 6 contracts short here, going for a slightly more positional play here. 6 contracts in short on that retest. I have a 5-point stop loss. I had a mental take profit of 5 points, but price moved pretty quickly to the downside once I got in this trade. So I trailed that stop loss behind as it moved into profit and ended up securing 7 points on those 6 contracts for $1,700, turning into quite a nice juicy trade. So that was a really, really clean execution there, and I got out just before that pullback. And you can see again, this same area, although a little bit more messy up here, did act as resistance, retested this zone before pulling down and continuing this move to the downside. We've now found buyers down here at the weekly discount level, previous week's value area low. We've found some consolidation and buyers pulling that back up. So interesting to see, but that was the reason and the process behind selecting my short trade using the volume profile with weekly, daily, and current session profiles all in conjunction to get an idea for a trade, to execute that trade, to get in and out as quick as possible. Again, that trade only taking a grand total of 1, 2, 3, 4, 5, 6, about 6-7 minutes to be, and then I'm done. So that should give you a bit of an insight into how I'm framing my trades and how I'm using the volume profiles in conjunction to get a trade idea. And again, it's just part of my daily routine at this point, guys. You know, normally about 10 minutes, I wake up, I look at the charts, I put my levels on the chart, I look for the nearest opportunity, I take that opportunity, give myself either one win, or if it's a loss, then one more attempt. So either one win, or worst case 2 losses, and then cut it for the day and continue on with my day. So that's volume profile in action, and these are taken on my Take Profit Trader accounts, locking up some nice profit for the week on the Take Profit Trader accounts already. So tomorrow we're switching over to my Apex accounts and continuing to build those balances on the PAs as well. And thumbs up if you enjoy these trade breakdowns. Again, we're just going straight education now, no clickbait or trading psychology, no, it's just straight execution and education. Thumbs up if you're liking these videos. Let me know what you want explained, what you want to see more of, and I'll continue to keep trading and sharing this info with you guys. So catch you guys next time.